Today in the livestock market, it was a little bit easier on live cattle. The backlog adjustments after the JBS cyber attack really had everybody kind of a little discombobulated with the market, and so we had a little bit of easing of the market Friday. Also, the box beef prices were somewhat lower, and there's some concern that perhaps the rising grain prices are going to be an issue. Now, looking at the trader commitments, there's like 50,000 of open interest of the contracts, even though last week they sold 7,000 of them. So, but it's still long 50,000. That's reasonable with the feeders lower as well. Those high grain prices really pressing those futures. The feedlots might be looking to move cattle a little bit further. That being said, the economy opening up, we're well into grilling season, could really promote more domestic demand. With the grains rising higher, we know that might put a little bit of lid on the market, but there's possibly some strength down the road. We're going to be watching a day to day. Today, we just had a little bit of pressure. Now, that's completely opposite than what's happening with the hogs. The hogs, again, make a new high. Futures do trade above that 123 mark. It's actually get to 123.60. Demand is strong. Cutouts are strong. Cash is strong. Nothing has really changed. The supplies are tight. And until something changes or we actually meet consumer resistance, the market looks like it's going to continue to march on. And looking at the consumer numbers the commitment numbers, 82,000 contracts open interest on the long side, with adding about 3,500 last week. That just tells you everyone is on board and they're still looking for the market to move higher still.